Good morning, ladies and gentlemen, and welcome to the first breakout session of the Milk in Asia Summit. My name is Brooks Entwistle. I'm the partner and chief executive officer of the Everstone Group based here in Singapore and Mumbai, and I'm delighted to introduce this topic on India. Today's panel session is entitled Modi's Second Year, Realism After Optimism. We have an amazing panel today. I will introduce them very quickly in a second, and then we've got a lot of ground to cover. We're going to move quickly. We'll make this highly interactive, and we'll give some time for Q&A at the end as well. I'd be remiss if we didn't start by recognizing the fact that it is the Prime Minister's birthday today. He is 65 years old. We'll be talking about him a lot today, and so we'll start with that. The Milken Institute has an amazing amount and sense of timing around India as it relates to both the global conference as well as the India Summit. I had the honor and the privilege to moderate the India panel in Los Angeles in late April and early May at the global conference, and people will remember then we were exactly 1 year into the Modi administration, and we had a chance to reflect upon the famous tweet that Mr. Modi had sent after winning the election that India had won. And we asked the question a year later, last May, whether or not India had indeed won. 4 months plus have passed. We're in a very different time in the world, and in some ways a very different time in India as well. There was the Red Fort speech, the Independence Day speech on the 15th of August. It was a very different speech than the one he gave a year ago, which was a tour de force, a very confident, upbeat speech. This was more muted, perhaps more pragmatic and more realistic. Interestingly, in the first speech, his first Independence Day speech, Mr. Modi said he would need 2 terms to achieve all of his goals and reforms. It was illustrative in this August speech that he said he would need 3 terms. After that, and we, by the way, had named this panel at that point, Optimism to Realism, the Chinese situation happened, the market swooned, and India all of a sudden emerged as a bit of a great hope within the emerging markets. Growth rates announced at 7%, and the world became in some ways a different place for India. But has it been different on the ground? And that's really what we're going to do today, is to dig in across a variety of topics with this expert panel and figure out what has happened on the ground for you, the participants at the summit, to make sure that you walk away with a very deep understanding from the financial services sector, from the industrial sector, from the TMT sector, across a variety of different viewpoints, what is actually going on the ground in India. Our panelists today, I'll start with Gunit Chadha, who is the CEO of Asia Pacific of Deutsche Bank, Vinod Kumar, who's the CEO of Tata Communications and a broad member of the group, Rajesh Shah, who is the CEO and founder of the Edelweiss Group, chairman as well, and then Shivnath Tukal, the group president, corporate branding and strategic initiatives of the SR Group, and a former TV entrepreneur and personality in the country as well. I'm going to suggest that perhaps the title for today would be renamed if we had to do it today. And that title would be Modi's Second Year, Realism, followed by Optimism, perhaps, and then talked about with realism and optimism again here. Let me go into the economy and start there. We had great news at 7%. There are some firms out there, my previous employer among them, that have thrown out the 9% growth number again down the road in an environment when reforms are actually happening. Those are big numbers. These are halcyon days. But let's figure out from the panel where we actually are. Gunit, the Deutsche Bank view on the economy and your view on where things are headed.
So thanks, Brooks. I think we have to always put questions like that on a relative framework. There are not too many economies around the world which are over 2 trillion and will grow at 7% plus. Probably there are none, right? And I think the economy is stable. I would put an amber to green on the fiscal situation. Though India does have limited fiscal stretch, but it's amber to green. I think on current account it is definitely green relative to where it was 12 to 18 months ago. Inflation is down by 400-500 basis points. Real rates are in positive territory. In fact, probably one would argue, probably way in excess of positive territory. And that's not happened in the previous 5 to 7 years. You got FX reserves, which have augmented by 100 billion over the last 2 years. So if you look at the totality of India macro, the macro is actually in relatively good shape. The issues, which we may talk about going forward, is really in the micros, but we can get to that. But I would give an amber to green on India, and especially when you compare that with what's happening either in South Africa or in Mexico or in Brazil or in Turkey, for instance, like leave alone China, and we can come back to that. So yeah, constructive. The Deutsche Bank official view on India GDP is a 7.5% growth in this fiscal with a downward bias.
Great, thank you. Rajesh, you were in The Economist, quoted in a big piece this week about the economy, about the outlook, including how corporates are funding themselves. Be curious on your view of this question.
I think the key problem we all have with India is very hard to see any pattern emerging. There is always a lot of confusing signals at all points of time. What earlier Gunit was saying, very good macro, horrible micro at the same time. So I think in the same way, we are seeing some very positive changes happening as we go along. And what I feel one of the greatest things that is happening is we're seeing an emergence of a bond market. We all know that there are a lot of issues with the banking sector, with the high NPAs and all that. But in a very subtle way, in a very hidden way, we're seeing emergence of a very robust bond market. We're seeing a lot of changes happening in the financial sector, the capital markets as we speak. On that, we have got interest rate futures, which are fairly robust. I think repos on corporate bonds are starting to happen in a big way. So given all those changes which are there, I'm fairly optimistic that the changes are more for the positive. They may not be easily visible. They are very hard to see. But I think certainly a lot of positive changes have happened in the last 18 months in India.
Talked about this, about the business environment on the ground that you're seeing and what that looks like. Put the economy in that prism.
Well, first I'll caveat by saying that I go in and out of India a lot, spend about 10 days a month there, about 20 days outside. And I find that anything in the news in India, you should just drop the top 10, 20% and bottom 10, 20%. There's a lot of exaggeration constantly when you look at any data point in India. Right? And so based on that caveat, I'd say that I'm generally bullish. We find the opportunities in India continuing to grow. In preparation for this conference, I spent the last 2 weeks asking my sales guys, what were they seeing on the ground, right? I'm neither an economist nor a banker, so I have to go by what salespeople tell me.
Real business.
Real business tells me, right? And I could still be even more wrong than both the economists and the bankers. But what we find is it's steady. And in fact, domestics, in our business of telecommunication, domestic requirements are actually growing a little bit faster than what we've seen in the last 2 years. I asked the same question to those in our organization who sell services into India. And there I'd say there's almost no change. It's just flat. There's more conversations, people having exploratory discussions, but not buying more. So it gives me an indication that the multinationals who want to invest more in India are keen, studying more, but the spending hasn't started. And that may be reflected in other economic indicators as well. But domestic business is actually getting more confident, especially in the area of financial services, healthcare, some parts of education, and so on. And retail and e-commerce has been seeing a big growth, and we're seeing that translating to actual demand.
Great. And for the group, we're going to come back to topics on deep sector. We will spend a fair amount of time on TMT and the internet as well. Shivnath, talk about your group. The SR Group has a broad range of businesses. They touch many parts of the economy. Your sense of what you're seeing now, both within India, but also the group's perspective outside of India looking in as well.
Yeah, thanks, Brooke. To begin with, the topic this morning is quite good. In fact, it would be a tragedy if it were inaction after optimism. I think the fact that realism is a continuum of what we had seen in year one at the Independence Day speech, and you rightly put it, that it had to be muted this year because once you get a grasp of what's happening on the ground. Two limited points on the way we are looking at it. One at the macro level, beyond the statistics, and one at the micro level. At the macro level, a lot of action is being taken, which is not visible, and I can blame my former media colleagues for that. And these are baby steps which are being taken to streamline processes which may not be visible, which may not be written about. And that is the action towards empowering the states and making them much more accountable. So India is no longer this one country. It is a country, a collection of many, many states. And a lot of action is being taken towards the state level. Competitive federalism as a concept is becoming the order of the day. As a result of which, you will see much more action if you go and deal with the state bureaucracy and the state governments. And the newer and the smaller states like Andhra Pradesh and Telangana, all these states are picking up the action. And that is a very important macro point to note, especially from an investment point of view, because when you put in money, when you set up manufacturing units, you actually have to deal at the state level. The second micro point from our perspective, a lot of transparency is coming in the processes of permissions and regulatory approvals, which wasn't the order of the day in the previous government. This makes it much easier for newer projects to get their permission and get going. you don't face unnecessary risks or delays. So from our perspective, new projects, if you are in for it, I think you'll have a much smoother ride than what you've had in the past. And I'm not even talking about the past projects, which is a big problem area. We can talk about that later. From a world perspective, we are watching, of course, the global turmoil. But from an India perspective, if you look at what's happening across the world, we are an energy-dependent country, so it helps us if the commodity prices are down. We are pretty comfortable. The government acted very fast on steel by imposing a safeguard duty of 20%. We were worried about the Chinese steel imports into India. So I think both macro, micro, we are pretty optimistic, and I think the realism is a logical extension of that optimism.
Great. And we will come back to this state versus center. We're going to have a section that we'll talk about on the political front as well, so I'm glad you brought that up. Before we leave the first brush at the economy, I'd be remiss if we didn't talk about the currency and the rupee very quickly. And just to get you, Rashesh, the house view on the rupee, you'd seem to, from an environment standpoint, low oil prices, et cetera, it's a reasonable environment, yet the rupee slides. Relative to other currencies, of course, it looks pretty good. But any house view that you would pass on or observations for this group?
Yeah, I think it's interesting because what we are seeing is from a pure fundamental point of view, ideally the rupee should strengthen because we should have a current account surplus in the current year, and along with the FDI and the FI flows, there should be a total balance of payment surplus. But I think the key thing is that the government and the RBI also wants to maintain the export competitiveness. And what we have seen in the last 1 year is there has been a huge intervention by the Reserve Bank of India. In the last year, if my estimates are correct, Reserve Bank has accumulated almost $80 billion of extra reserves by intervening in the market. So what we will see is there will be a positive, a positive trend towards the rupee, towards appreciation, but the Reserve Bank will continue to intervene. And currently, the reserves are about $380 billion. And through some, statements by the Reserve Bank, we think they are comfortable going up to $500, $600 billion also, which will be about, a quarter of the size of the GDP in India. So we will see a trend towards appreciation, but the Reserve Bank will ensure that there is not any sharp appreciation. So relative to other Asian currencies, we might either be stronger or we'll just depreciate enough to maintain the export competitiveness.
Gunit, your firm is one of the leading players in foreign exchange. You track these all over the world. Perspective on India and the rupee versus some of these other currencies and markets that you mentioned.
So obviously of great concern to many of the market participants as the race to the bottom, right? We believe that actually China currency will stabilize around current levels with a slight bias downwards, but not any significant moves over the next 18 months. China has many other ways to make sure that its competitiveness stays intact. And in light of that, and in light of the fact that any Fed move, whether in September, December, or thereafter, is likely to be muted and of a sort of very graduated pace, I think the downward pressure in terms of the rupee having a free fall is a low probability event. We think that the rupee will stay in the 66 to 68 corridor. But having said that, very often markets react way beyond where is a fair number. Rashesh, actually, I think the Reserve Bank of India will still be encouraged to augment their FX reserves by possibly another 100 billion over the next couple of years. And in that context, I don't think they're going to use up too much of the money to stabilize the rupee unless the rupee went into a free fall led by other external currencies.
Actually, I would add another small point. I think we are all very focused on the rupee US dollar rate, but increasingly we're getting a sense when we speak to a lot of corporates in India, the key exchange rate we should also monitor is the rupee yuan rate now, because China is a key trading partner for India. And if you see the rupee with a lot of other currencies, including yuan, it's not really fallen as much. It has fallen vis-a-vis the US dollar. But I think that dynamic is also undergoing a change.
Great. Good perspectives. I wanted to make sure we got that in early, as I know there'd be a question from the audience. Let's turn to reforms and spend a bit of time here. And Shivnath, I want to start with you. There were so many promises in the first year of reforms to come. And certainly things were accomplished. We can all debate as to whether or not success rates across reforms. But I want to make sure the audience takes away, and we'll have the whole panel comment on this, on what reforms have we actually seen, where have we had backsliding, perhaps with land reform and other issues like that. and just what you're seeing from that perspective. And we'll use this as a chance to ferret out some of these state versus central issues as well.
Yeah, so as harsh as it may sound to the audience here, if you're expecting legislative changes coming out of the parliament of the country, I think you're barking up the wrong tree. The political formation of our country right now does not permit too many legislative-led reforms, and land bill was a great example of that. But then when you step back, and that could continue till 2019 because the upper house, lower house formation is not going to be in favor of the government. But if you step back and then try to see the clarity amidst this chaos, is the fact that Narendra Modi's government is slowly putting into place pieces which allows states to compete with each other. For the first time, World Bank did a study as to how all states stack up on the Make in India checklist. Not a great performance by all states, but surprisingly enough, one of the smallest states called Jharkhand came at the top. It may not be attracting investment, but it's making the ground ready for attracting investment. Number two, once you allow states to compete with each other, to come back to your point, Brooke, what is happening is in Mumbai, for example, and Rashesh can vouch for it, huge advertisements for investment conferences by states, Uttar Pradesh, West Bengal. So you come in and every investor conference is happening in Mumbai. That is a clear indication that they figured out that Mr. Modi is not going to stop them from going out there and attracting investment into the state. Third, institutionally, to dismantle certain things is not going to be easy. I think the first symbolic step was taken with Niti Aayog and the disbanding of Planning Commission. It is still not very effective, which is fine, but it's a matter of time. Once you have dismantled certain institutions which hold us back, I think you would have opened up a lot of action fronts. In a lot of ways, what we are seeing on reforms is you have to get ready for baby steps. The time for symbolism may be limited to social reforms, and I think, as you said, this forum does talk about that. I think some initiatives are being taken. While a lot of media criticism or sarcasm comes towards the Clean India initiative or Digital India initiative, the fact of the matter is we weren't even talking about these things. And the government has got that monkey off its back by allowing it to become a talk of the town. So now let's focus on economic reforms. We are seeing some action on roadways. It isn't as if there is no action. There is a lot of cleanup which happened in roadways. Power sector, the new projects coming in will benefit hugely from the auctioning. The past projects had no option but to go desperately after aggressive bidding of coal mines, which wasn't a great idea, but we had to do it. But the newer projects will face a lot of clarity, will have a lot of transparency. We expect some more ore mining auctions happening. That will help us a lot as well. So I think the wheels are chugging along. You don't expect somebody to wake up from a 10-year slumber and not yawn in the first year. Right. I think that's what you're seeing right now.
Right. Vinod, not only in your own business, but across the entire group, tremendous perspective on this, on whether or not things are actually happening.
I'll speak about two things. One is bureaucracy and corruption. Right? I think when you look at India, you can't help but discuss that. We clearly see a difference in what's happening at the state and the centers. Right? And we'll talk about the point about state and centers, which is an extremely important one because states actually account for 60% of total government spending in India. So a lot of focus is on what happens in the center, but we've got to look at it at a state level. But on bureaucracy, I can say that what we are seeing across business lines is clearly there's a tightening of the bureaucracy. Modi is really after the bureaucrats to perform more efficiently and weed out corruption there. Where he's more successful clearly is at the central level, and we are seeing enough signs of that. At the state level, frankly, it's a patchy framework. There's some states that are way ahead of the bulk of the pack, but those only are a handful of states. So bureaucracy improving, corruption lessening at a central level. At a state level, it's still a quilt work. Some good stories, but quite a few bad ones still remain.
Good, that's good. Rajesh, you must put out a variety of research reports out of the firm about reforms, the status, a checklist of what's been done, what's still missing, what's been promised, what hasn't been delivered. Walk us through some of that list there.
Sure. As I said earlier, I think India is a very confusing country, and even for us Indians, I mean, I can empathize with the foreign investors, but even for Indian investors, very hard to see the pattern, and it also gets a lot more exaggerated by the media, and so the good and the bad, they're both very, very exaggerated. So it's very hard to see any pattern. And historically, India has always been 3 steps forward, 2 steps backward, a little bit of a zig, little bit of zag. So it's very hard to see any real patterns. But if I see the last 18 months, I think a lot of changes have been implemented by the government. I think the key important thing is we have not seen any big corruption scandal. Corruption, when we talk to the corporates and all, we're seeing that the high-level corruption has almost gone away. So all those are the good signs. I think we had the telecom auction, we had the radio auctions. They've all gone through smoothly without any scandal, without any uproar around that. We're seeing the insurance FDI which got implemented, and I think the key thing is increasingly the states are going to be leading the way. And when we talk to the government, they are very comfortable with that, because the way India works is the center has a veto power on a lot of reform policies. But the states can execute a lot, especially in the primary and the secondary sector. So if you are in the mining, manufacturing, agriculture-related areas, then actually states are a lot more important to you. The policy of the state is a lot more important to you than the central policy. If you're in the services sector, then the center does end up mattering a lot. And I would just conclude by saying that we should all acknowledge that India is inherently a socialistic country. And there is always a little bit of apprehension about markets and reforms and open market economy. So we will see, and actually in the last 18, 20 years, we have seen a lot of reforms happen either through compulsion or through stealth. So it will happen in a very, very hidden way. As I spoke earlier, we are seeing a lot of changes happening, but they will not be visible, because the moment they start becoming visible, they get stopped. So it will happen in a very subtle way, and it has been the pattern for India for the last 18, 20 years because of this inherent distrust of reforms and markets.
One point I'd like to make here really is at the state level, one of the interesting things in India is that the economic discussion has come into political rhetoric. Right? In the past, it was more about other social issues, caste, and so on and so forth. I was reading an interesting statistic that if you stack rank the states based on GDP growth over the last 10 years, 58 or 60% of the states which fall in the above average category in that ranking, the incumbent has come back into power. And in 35% of the states, they haven't come back into power. And that's, I think, quite new for us Indians. In the past, there may have been no correlation, is my suspicion.
And it's an important topic. I want to make sure and get to you on this as well. From either a financial services industry perspective or just broader, anything that hasn't been delivered that you think is critical, recognizing this gradualist approach and historical approach to reforms?
So I won't repeat what my colleagues have already shared, but I'm actually a big buyer of the reforms which the Modi government has initiated and actually delivered out, right? And lots has been said about that. Actually, I'm more bullish on Mr. Modi's government than actually I am on India overall, right? And that's because of the legislative issues which India will have, irrespective of which is the government in power. Also, worth stating that we are judging reforms by the perfect endgame where we want them to be, right? Reforms is a difficult process. Even global financial sector is taken over 5 years, and yet it's not come to a landing point in terms of the reforms. Companies take 5 to 6 years before they sort of reinvent themselves. Here we're talking about the second, third largest demography in the world, right? So we got to judge people by the journey and not necessarily by where the perfect state is. Having said that, I think there are 2 or 3 areas where I would like the government to do a bit more. I think Mr. Modi and his ministerial colleagues, many of whom I've met, and I think they are perfectly aligned both in their intent and alignment around the reforms. They've done a fantastic job of tapping into global Fortune 500 companies, right? And who are sitting on trillions of dollars of cash on the balance sheet using for dividend buybacks or stock buybacks or dividend payouts. I think that's a very smart strategy. I, however, think that it is time that the Indian tycoons, the Indian entrepreneurs, also get confident back on India. And while that's happening, I think there's still some way to go. So the global FDI boardrooms, frankly, even at this point of time, are more excited about India and willing to put their cash on the balance sheets than some of the Indian majors who obviously have some issues with the leverage historically over the confidence, etc. So that's one. The second area where I think reforms are needed outside of the land, labor, and GST is really on the bankruptcy code. I think it's imperative that the bankruptcy code is put into place, which allows bond investors, bank investors to make sure that productive assets don't go unproductive with the passage of time. That is absolutely, to my mind, the most critical thing needed in India right now, and which is also going to help in the rejuvenation of the public sector banks, which I think lots has been written about, and it's starting to move in the right direction. Long way to go.
Great. And we're going to stay with you on the next topic, Gunit, which is China. This is going to be a big topic. It was in the first panel. It will be throughout this Asia summit. Jayant Sinha, who's the Minister of State for Finance, was quoted, and this is in Bihar, which we'll talk about in a second as it relates to the political situation. So this is a politically motivated statement. But it talks about that India, and I'll quote, is ready to take the baton of global growth from Beijing. In the coming days, India will leave China behind as far as growth and development matter. Those are interesting words, and it reminds me of a time in 2005, 2006, when I first got to India, and all of us were there together, when you still talked about this China versus India debates. That went quiet for a decade, but it's been interesting in the press for the last couple of weeks as growth rates have come out, and this notion of India being a driver of the global economy, and not superseding China, but having a role in that, has come back into the forefront in the press. Good, I'm just curious. You just got back from China last night. You've got a perspective on this. Is there anything to this?
I could be horribly wrong in my perspective, but certainly I spent the last week there. Firstly, I think that debate happens more in India than in China. Secondly, I think we're talking about a $10 trillion economy versus a $2 trillion economy, right? So let's not get too much into the 7% versus 7.5% of each country. So we just need to see both of these countries, India and China, present a huge amount of opportunities to the world in terms of the absolute amount of GDP which is going to get generated, incremental GDP which is going to get generated. And both these countries, in my view, present a greater opportunity than risk for global capital. I think our view on China, again, as a Deutsche Bank view, is constructive. We think China will have come back into the 7.2% growth rate in the second half of this year. And though the slowing down will continue to happen in 2016 in the high 6 range, but we're not getting into a hard landing, is our view on China, which then mirrors with our view about market reforms happening and yuan being relatively stable. It seems that the property markets have started to stabilize in the tier 1 cities in China, though in the tier 2 cities where I was for part of my trip, one could see a huge amount of vacancy out there. I think China has the resources. China has incredibly good and strong leadership, and the recalibration to becoming a more market-driven economy will have its cost, but that cost, hopefully, and that's our base case view, is not going to be catastrophic either for China or for the world. And 12 to 18 months from now, China, in that recalibration, could provide a huge amount of opportunity, not in the heavy manufacturing sector, but in the broader services sector, which is where the focus is through mass entrepreneurship and innovation as the next drivers of China. So we remain constructive, and yet it remains for us as the single biggest global risk if our base case would turn out to be wrong.
Great, good perspective. But no, you run a business that actually, China and India would compete around this business and the underlying products, et cetera. Your perspective, I know you also spend time, but again, not in the context of just how China's doing, but China relative to India and the two together.
So, sorry.
I think the question. Sorry, Gunit, you were saying something?
No, I just wanted to close at one thing.
Sure.
I think Mr. Modi's Act East policy and embracing China and embracing the East could be pretty telling in how India and China start to impact the world together more as one force rather than as competitors only.
Good point.
Good point. Frankly, I think the debate probably was more relevant 10 to 15 years ago, even before you were in Mumbai. It's a pointless debate right now, in my view. And I wouldn't read too much into Jayant Sinha's statement. It's in the context of a political campaign. There's a level of rhetoric to it that's my take. I believe the battle could be more on soft power, and I think Modi's orientation towards China to see how we can jointly share some power in this is probably more relevant than trying to compare whether China or India will take the baton as far as global growth is concerned. India obviously will play an important role, but I don't think it's on the same stage as China at least for now. And there's not a pessimistic view, that's a realistic view that I'm taking. Sectorally, it varies. Obviously, when you look at some of the services sector in my business, for example, when it comes to businesses outside the home market, Indian companies actually have a lot more presence and a much bigger market share than China. But when it comes to domestic services, when it comes to technology in the mobile handset space, for example, or in the equipment space, much bigger players in China because of also how in the early days they protected their market and grew local technology, which then they exported. There's some great examples of companies now producing world-class technology out of China. India doesn't have one such player. But in the services space, I believe the players are emerging fairly rapidly in India and will probably rival China there. And that is, you can see that in other sectors as well. The services side, when you move out and go to the global stage, Indian companies probably have some edge.
Great, perfect. And that's the appropriate amount of time on that. We just felt we'd be remiss if we didn't bring that up. Let's get to a very interesting topic, which is politics and election season. There are an enormous number, some 13 number of state elections in the next 2 years, but the biggest perhaps on the horizon is Bihar. It is actually an election that is attracting not just interest in India, but with the Foreign Diplomatic Corps, there's diplomats traveling on a regular basis to really suss out, because this could be a big point as it relates to how this goes. Srinath, you've covered this for years in your current role and your previous role. Give us some perspective on not just Bihar, but again, tying back to the state versus central issue, the importance of some of these state elections.
Yeah. I think on a lighter note, election is the only recession-proof industry in India. So you see it so many times through a 5-year term of any government, you have no choice but to look at it. But 3 things I wanted the investor community to look at when you look at the commentary of the campaigning. Bihar is a state ridden with caste issues. It has a lot of caste-oriented formation, alliances, violence. Pretty much the politics of the state is caste-led. However, a party like BJP, which is Mr. Modi's primary party, which had no say in Bihar until that alliance came together between BJP and JDU, which was Nitish Kumar's government, BJP was not even a player, a serious player. But now suddenly for this state election, you have all the parties gang up against the BJP. By the way, while all the parties are doing it because of caste formations, BJP is also doing the same, but is not talking the same language. If you go by the campaigning, and of course Mr. Modi continues to be the star campaigner by himself, he only talks about development. What baffles me is that every other political formation continues to talk about secularism, caste, and the nature of the commentary and the polity is clearly getting divided on those lines. I think this time round, while I keep talking to all my former colleagues, it's still 50-50, I would say, but the edge is towards the NDA formation. And the reason being, because the last elections proved that once you start talking development, do not compare it with Delhi. Delhi was an aberration, and I'll come to it for a second in a bit. But Bihar as a state is a formation of so many diverse communities, castes. People suddenly start seeing that what did I get in the last 25, 30 years playing the caste game? And this time round, at least someone of a national stature who's sitting out of Delhi is talking about the development game. I'm not saying there's no politics in it. There is a lot of politics in it. But for once, we are hearing on the ground that the edge is towards the development game. 2, whatever Mr. Nitish Kumar did for the first 2 terms of his, it was much needed, the social reforms. You needed to equate the girl child with the other gender. There were a lot of issues. But unfortunately, no major investment went there. For the first time, we are talking about which factory did you get set up in Bihar? You didn't. So in a lot of ways, the nature of the commentary is beginning to appeal to the voters. Of course, if you go by the polling and if you listen to the media, you may hear certain broken views, but we hear on the ground that the fact that Mr. Modi is able to tell to the voters that, look what I did in other states. I empowered the states and they are doing so much better. And this, by the way, cuts across both Congress and the BJP states. So we'll all wait till Diwali. It's right before then when the results come out. But I think there is an edge, and I think Mr. Modi's national moves will continue into the states. The other big issue continuing with state politics is, and why I said the legislative changes will be difficult, because almost till 2018 is when you look at Punjab, you look at the other states. By the time you get the Rajya Sabha formation, it'll be too late for Mr. Modi to act. So he, in a way, has figured out that there's no choice but to go the state route. Because if you do go and empower the states, you will realize that suddenly the support has to come from bottom up rather than top down. So I think in that way, they're in a very cushy position. If I may, Brooke, one thing though, which the states cannot do, and I think we need to be very conscious of that, and while I'm very bullish on the state route, is states cannot build national infrastructure. And that's where I think India's biggest lag will come from. I think infrastructure will be the biggest problem. And if I may go back to disagree with Gunit for a second, while you can tap into Fortune 500 companies, the entire Indian infrastructure story has been built by Indian companies. No major foreign company came into the infrastructure space because of whatever problems. And I think that's where Mr. Modi needs to address the past issues, and that cannot be done by policy. Those are individual problems, because under UPA government, it was all individual-led policy. That has to be sorted because growth capital is stuck there. Leverage or no leverage, foreign companies are not going to come and build my bridges and my roads. It will be Indian companies, and they have done it. Until we free up that situation of individual cases being stalled, Supreme Court going and cancelling licenses, and then power projects just go unviable, if those issues are not sorted, the Indian growth capital, which is much needed, as Gunit said, will not be freed up. And for that to be freed up, you need to address those issues, which cannot be done through state reforms. It has to be done at the national level.
Good. Rajesh, any comments from you on this? And then we'll move on to the next topic. I want to make sure, again, you see this from a market standpoint and from other viewpoints from where you run your firm.
Yeah, I think the only other couple of things I would add is, the entire election structure in India is also very complex because we have the first past the post system. So a little bit of swing here and there can create a huge number of seats, either positive or on the other side. So what we are seeing is, in all the elections in the past, wherever there was a united opposition, the NDA formation always struggled. And whenever we had 3-horse, 4-horse race in any state or in any election, usually NDA ended up doing very well. If you look at 2004, though they had the same vote share as in 99, they lost because there was a united opposition. So I think in that sense, the upcoming elections in Bihar will be very crucial because there is a united opposition, which is going to try and bring all the votes together. And here is where I think NDA may end up struggling because every time you have that. And I think along with that, what other counterpoint that is happening is all the surveys we see, all the opinion surveys we are evaluating, there is an equal balance between the old way of doing things, which is caste and secularism and all of that. And there is a new one, which is aspirational India, the youth of India, the second tier, third tier cities and all. And we're finding they are fairly evenly balanced. And in the Indian election structure, a little bit of swing either way can change, the whole dynamic of the outcome. So I think keeping that in mind, we should go into every election saying this will be fairly evenly balanced, and you should not try to read anything out of only one election. So even if the NDA struggles in this election, I don't think it's a vote on either Modi or NDA. It's an outcome of the arithmetic of economics, the way it ends up working in India. And the last thing on the infrastructure side, what we're increasingly finding is it is fairly, from a financial viability point of view, infrastructure has always struggled in India. It struggled in all other parts of the world. How do you make it viable? And we have seen in the last 8-10 years this big dilemma of how do you transfer the public assets which are used for infrastructure into private hands for commercial use of that. And I think the scams and everything we saw in the last few years have been in a way good because it has now resulted in a policy, in a structure by which this transfer of government or the public assets into private hands happens through the auction system, through a court monitor system, which is in the long run fairly beneficial. So I think that will allow the creation of infrastructure to happen.
Great.
Can I just make
Please,
a point
go ahead,
on that infrastructure? I really think that while the global capital, which is struggling to earn 10 basis points on its cash, would be a perfect solution to build the India infrastructure, I actually think there is no clear absorptive capacity right now which allows global capital to come and invest into 10 to 20 years of Indian infrastructure with great regulatory certainty. So I think the missing piece is as much the build-out, whether private or public, but also, is there any mechanism which creates that absorptive capacity to actually put money to work here. I'm not sure that exists right now. So whether India should do a sovereign bond, whether the government ministries should go and raise capital and become the intermediary, it's not clear right now as to how will global capital find its way to build India infrastructure.
But Gunit, just to, if I may, just add, supplement to what you're saying is, yes, you're right, it wasn't there. But if you look at the baby steps which I referred to at the start, what are those baby steps? And we were at the Economist conference last week and we heard the same things. What worries global capital to come in? Land acquisition, big problem. State level corruption, big problem. Security of land deeds is another big problem. But I heard the IKEA chief talk about it, and he said, you have to have belief and willpower if you want to come into India. And I think global capital will only chase once you put those baby steps in place, because the absorptive capacity that Gunit is talking about is linked to the transparency and the lack of corruption which it needs. And I think we are beginning to see that. The only reason why Foxconn today is bullish on India is because a state government is going out and saying, okay, I'll give you land. This is going to happen on an open process. I'm going to give you labor. The issue is the center in sync saying, okay, I'll not impose a tax notice on you. And I think for the first time, we are hearing that, yes, the center is saying, okay, Foxconn has to come because Mr. Modi has invited them. And AP or Telangana is going to let them set up. So let's not get into these tax issues which we have done in the past. So I think it's beginning, and we are seeing the first glimmer of hope.
That's perfect. Go ahead. I'm going to pick up on Foxconn. We're a little bit pressed for time, and we are going to go to the audience take two questions. But Foxconn is a perfect segue, and as a moderator, I want to go to one point we'd be remiss in not covering here, which is just the technology and internet piece. And then I want to come to you. It's illustrative to note that Prime Minister Modi will be going to the west coast of the U.S. Later this month. It's the first time in 3 decades that Indian Prime Minister has gone to the west coast. He will be meeting with Tim Cook at Apple, which was announced yesterday. He's going to the Facebook campus for a town hall. He'll try all sorts of new products, the Googleplex. It'll be an amazing trip and an important trip, but it signals an underlying piece of the economy. At the global conference in LA, I had Bhavesh Agarwal from Ola Cabs on my panel. He's obviously locked in a battle now, royale with Uber. Tell us very quickly about just the sector itself. Are you a believer this time around, internet, technology, and otherwise, that we've got some global winners?
Big time. The level of startup activity that we're seeing right now is just unprecedented, and I think it's just the beginning. The talent that's going in, the capital that's being made available to them, and just sheer scale of ambition of some of these players is very promising. Like any ecosystem like this, there'll be more losers than winners, but I do believe that we're going to see some big winners out of India. And some of the work they're doing is relevant to a very global context. So it's not just services for India, right? These are services that can create global businesses. I don't know when it'll come out, when the next Google or Facebook will come from India, but there'll definitely be some meaningful players, in my view, in the next 3 to 5 years. I have no doubt about that. And it's very interesting work that they're doing.
Rajesh, you're going to be key in that because you've got to finance some of these companies and get them out into the market, given this is a market-based conference. Any thoughts on when we might see the first kind of wave of some of these companies coming to market and going beyond some of these hefty private valuations that are in them?
I think it's already starting to happen, and I think we're seeing a huge amount of capital that is available. The concern I have is a lot of them may not go into the public markets, because I think the rigor on profitability and other transparency issues in the public market is a lot more than what the appetite for the private investors is. So we might see another 3-4 years, if this trend continues, of companies being able to raise a lot more private money than public money. And the other trend we are seeing is there's a lot of activity in e-commerce, but we are not seeing as much activity in the financial technology space, fintech, which affects all of us. But I think the next trend is going to be in the fintech arena. And we're seeing a fair amount of, in the payment system and all of those areas, some amount of innovation, some amount of capital that is going into that. So analytics and fintech all is going to be the next wave. What we've seen up till now is more been e-commerce led up till now.
Yeah, but if I may, even in e-commerce, there's only 5 to 6% of retail in India that's done over e-commerce. So there's still quite a lot of room for growth as well as innovation there.
Right. Good. And fintech, by the way, will be a topic at a discussion later this afternoon, so very much on point. From the audience, time for 2 very quick questions, not statements, and we'll direct it to one of the panelists if we could, and then I'll wrap up. The gentleman there at the table.
Just as investors who invest into India, I guess we've talked about regulatory reform on infrastructure, but any thoughts on corporate governance and investor rights? Because that is a very big issue. We still have an environment in India where we treat, firstly, the unique concept of promoter, who is treated like an endangered species, and investors who then invest end up finding themselves in very difficult situations when it comes to enforcing rights, exits, and a variety of other things. Is there something that you're seeing? Is this an active agenda in the Modi government mindset that to attract capital, you also need to have an environment where that capital is respected and has a faster access to legal reform that allows us to behave in a way that will be more consistent with economies that we'd like to aspire to be like as far as India is concerned?
You want to take this one?
Yeah. Very quickly, Samir, yes, that commentary is changing on the ground. Whether it has led to changes in the boardrooms or not, I'm not too sure. But in the backdrop of what Brooks said at the beginning, there is a general mistrust that society in general has to capitalists in this country, in our country. And I think it's a logical extension of what you have just articulated. And I think the problem here is that we've had a lot of bad behavior. You cannot run away from that. And bad behavior always has a legacy which you have to go and clean up. But there I would also say that Mr. Modi's government is at least sending out the right signals. His comment in the Independence Day speech, I don't know whether you guys heard or not, about the radio auction was a very clear indication that he's not going to succumb to corporate pressure. I think that's good. Second, I don't think many Bombay corporates need to go down to Delhi that much, which is again a good sign, I think. And I think healthy distance is always a good sign. And I think he's beginning to send that message out. While dealing with banks and the investor community, I think you pretty much have that conversation going, although Rashesh is a better person to answer that. But I can only tell you from a commentary point of view, and the ecosystem in general is beginning to ask far too many questions. And I think social media is something that while corporations don't really care about social media, and I know that because I face that all the time, I'm a big believer of it. You may as big as you may want to be. You can run, but you can't hide anymore. I think that's a good sign. It will enforce better behavior and better governance in boardrooms in the coming years.
We had another question up front here. Sir, please. And we'll do one more, and then we'll wrap up.
James Lee, I'm an investment banker based in Shanghai. I remember in 2006, we were probably on the same panel talking about acquisitive India. Now, there's a lot of synergy between India and China, but honestly, today we actually used to do a lot of deals. But today, there's virtually no Indian deals, coming to China, and very few Chinese deals going to India. We actually work on the deal level, but I'd like to hear from you guys on the macro level what's going on and really what impacts the sentiment and why are we not seeing more deals that are actually mutually beneficial.
Going to quickly, China-India deal flow between the two.
Non-existent. So your life gets a bit tougher.
Yeah, my question is, why do things dry out?
I think India the smartest thing Indian corporate houses should do is effectively to seek China as what could be the biggest pool of capital globally over the next 5 to 10 years. And I think that there's a huge amount of capital which should flow in that direction, for one. The other place of connectivity between the two will really be around the trade corridors, right, in my view. However, the FDI corridors between India to China or China to India, I don't see that happening because I think it's going to take a decade for trust to be built between entrepreneurs on both sides of the table to profitably do business with each other. And there is no history of that. Right? And the history, in fact, goes back a century. So there's no history, recent history. So it'll take time. So I think trade will lead it. Capital flows will follow. But FDI flows in terms of joint ventures of Chinese and Indian companies, still a step away.
Okay. Last question, the gentleman with his hand up there with the mic over there, if we could.
Hi, thank you. I'm Robert Craybill from Impact Investment Exchange here in Singapore. We've talked a lot about regulatory reform, but the focus has been on business and on the investment climate. To just harken back to one of the themes of the last panel, human capital and the importance of education, think we all look at the Indian system and see a great elite education, but a faltering mass education. Are any of the reforms, is there a recognition within the government that there needs to be reform there, and do you see any action to address those issues?
In fact, if you see, what the government and the Prime Minister have been talking about, there is a lot of emphasis on skill development. So if you just expand the education, the definition of education to include skills, there is a huge amount of focus on skills. I think the challenges with the primary education and the secondary education still continues, because we still have the school system in India which is not reformed, which still struggles. A lot of that is still being delivered by the government, which has a quality issue along with that. But I think this government is starting to focus a lot more on skills. So we are not, to answer your question, we are not really fixing the education piece per se as much as we should, but we are starting to fix the skill issue, because as with everything else in India, there are a lot of opposites out there. Like we spoke about earlier, great macro, horrible micro, all of that. The one issue we have in India is a lot of people looking for jobs, but if you talk to any corporate in India, they will constantly say they can't find good people. And we are hoping that over the next 5 years, the skill gap will start to get bridged, and hopefully it will create quite a few jobs as we go along.
One thing that will contribute, we can debate whether it's the right policy or not, a policy requiring corporates to designate a percentage of their profits to CSR is forcing corporates to get engaged more in education, healthcare, and so on. That will have a trickle-down effect, but it will take time.
But if I may, just add, it's very easy to be a pessimist if you look at 15 million jobs that are needed to be created every year. It's not easy to do that. But if there's one thing which scares me individually and a lot of our people back home, is that our demographic dividend could end up being a demographic disaster, because we feel that those numbers are huge, and if you link it back to all the good macros and that investment doesn't come in, you will not be able to create those jobs. So the gap between employment and employability still continues to be one of the biggest problems India will face, and a lot of the social unrest, do not discount that, because, and I'm not trying to be trying to create scare, but you will continue to see those tensions in society, because eventually it's all about jobs. Eventually it's about livelihood. And Mr. Modi's biggest challenge, according to me, is not reforms, nothing. It's about to make sure that the youth gets what he promised, is a better future and meeting their aspiration.
Robert, that was a great question to lead into, and Vinod, your answer as well, all the answers. The moderator's prerogative, the last thing we'll do, wrap up in 1 minute, is to do 3 rapid-fire questions to the panelists. 1-word, 2-word answers each. We'll go up and down. And the first one that I had on my list to ask, and you prompted this as well, is the notion of your firm's CSR, corporate social responsibility initiatives, one initiative that you have going at your respective firms in the country in India.
From a SR perspective?
From each of the organizations.
Our focus is clearly wherever we are present, we have to ensure that the society around it is empowered through employability, through employment, and as well as ensuring that the environment around, because we are in industries which are questioned very easily, core economy, that the environment issues are addressed in the nearby ecosystem.
Local ecosystem. Rajesh?
I think our foundation focuses a lot more on education and employability, because we think capacity enhancement for those NGOs doing work in that is a key to really solving some of the problems.
I know Tata's got so
I
much
don't know
going
where
on,
to start with
give us
Tata
one.
Group. But for Tata Communications, it's actually around bridging the digital divide.
Right. Gunit, Deutsche Bank, lots of global initiatives, I'm sure, but anything India specific?
Education.
Education.
Primary education.
Great.
Single hand.
Fantastic. Next one, this is an easy, there's only 3 answers. Up, flat, or down, Sensex 1 year from now when we're back at this conference. Up.
Absolutely.
Hard to say.
Hard to say. That's okay.
I'm the least qualified, so I'll say up.
Will outperform other emerging markets.
Okay, good. And last, where we started, on Mr. Modi, 1, 2, or 3 terms.
Desired versus reality?
Your choice.
Desired 3, reality 2.
Yeah, I think if he gets 2, we can be very confident India will be a $5 trillion economy by 2024.
Both desired and probable 3.
Agree.
Great. So again, I think our theme changed, our title changed. Modi's second year, optimism to realism to optimistic realism. Thank you to the terrific panelists. Join me in thanking them, and thank you all for being such a great audience.